Prop Chat, ultimate insights of trading with Sabio.
Hey everybody, and welcome back to Prop Chat. This week, we're joined by a true heavyweight in the crypto space, Glen Goodman. You might know him as the crypto trader, best-selling author, and sharp market commentator. He was a TV reporter for BBC News, explaining market chaos to millions, and now he trades it. Thanks to a bold short during the 2008 financial crisis, he retired in his 30s with trading profits. Today, Glen joins us to talk myths, mindset, hype, strategies, and his personal crypto picks. So, ladies and gentlemen, please welcome Mr. Glen Goodman. Hello, Glen. First of all, I'd like to thank you for accepting our invitation to be a guest on our podcast. That's so great to have you here.
It's great to be here. Thanks very much for inviting me. I appreciate it.
Great, thank you. Let's start with a fun little game. I'll give you two crypto assets, and you need to pick one that you believe in more. So we'll go through 4 rounds, like tournament style, until only one survives. So feel free to comment on your choice if you want to. If you're ready, we can start.
Okay, go for it.
All right. Round number 1. First pair. Let's say Ethereum versus Solana.
Ooh, you start me off with not an easy one. Oh, wow. Ethereum.
All right. Second pair. Pepe versus Dogecoin.
Oh, that's much easier. Dogecoin.
All right. The third pair.
Yeah.
Okay. The third pair, Bitcoin versus Avalanche.
Oh, Bitcoin.
All right.
I mean, I like Avalanche, but Bitcoin.
All right. Another one, Toncoin versus XRP.
XRP.
All right.
So I'm a bit torn on that. I'll say XRP.
All right. Pair number 5, Chainlink versus Cardano.
6 months ago, I might have said Cardano because Charles Hoskinson reckoned that he was like that, like that with the US government. Doesn't look that way now to me, so I'm going to say Chainlink.
So now it's Chainlink. All right. Pair number 6, Polkadot versus BNB.
BNB.
All right. Another one, Litecoin versus Bitcoin Cash.
Litecoin.
And the final pair of the first round, Dash versus Monero.
Monero.
All right. So that's the end of the first round, and we'll continue to the round number 2. So it's Ethereum versus Dogecoin.
That's really hard.
Yeah,
because
I know.
obviously Dogecoin is a load of old nonsense and Ethereum is like amazing.
Kind of,
but
yeah.
Dogecoin has got a very powerful sponsor, like I mentioned before, and he seems to have lost interest at the moment, but he goes on about launching Doge 1 rocket to Mars or this kind of thing. It's like, what is the most amazing publicity for a coin?
Sure.
When he's in the mood, but when he's not in the mood, it just gets ignored. So it's kind of a tough one because it's like, what mood's he gonna be in 3 years' time or 5 years' time? It's impossible to know. So I guess for reliability, we know where it's going, we know what it is. I'll say Ethereum.
So it's Ethereum. All right. Another pair, Bitcoin versus XRP.
Bitcoin.
All right. Pair number 3, Chainlink versus BNB.
This is hard because even though I think Chainlink, I sort of have a lot more respect for it as a crypto than I do BNB, and Chainlink is essential to so much of the infrastructure of the crypto world. But BNB is owned by Binance, and Binance have deep pockets. I'll say Chainlink just for ideological reasons.
So Chainlink goes straight to semifinals. And the final pair of round number 2, Litecoin versus Monero.
Monero.
All right, final 4 is here. So Ethereum versus Bitcoin.
I'm going to say Bitcoin because even though I say in my book that Bitcoin impressed me when I first came across it, but it was Ethereum that really blew my mind and sort of drew me into the world of crypto in a much deeper way because, it was called back then the world computer. It's obviously its own kind of operating system. It's amazing. It can do so many things. All the other apps are based upon it and blah, blah, blah. But Ethereum has proper competitors these days, like Solana that you mentioned at the beginning and many others, whereas Bitcoin is still very much the brand, isn't it? It's still Bitcoin.
Absolutely, yeah.
Bitcoin. It's got to be Bitcoin.
All right, here's our first finalist, Bitcoin. And the second pair of the semifinals, Chainlink versus Monero.
Oh dear, that's hard because I think Monero is important from a privacy perspective. It's doing something very different to what most cryptocurrencies are doing and making it possible for people who live under totalitarian governments, say, to be able to transact anonymously in ways that they simply can't do with Bitcoin or many other types of cryptocurrency without the danger of their governments finding out. But it could end up getting banned, couldn't it, by a lot of major governments, which wouldn't kill it completely, but it would certainly cause it an enormous amount of problems. And I'm actually surprised it hasn't even happened yet. All right, I'll have to say Chainlink because I think it's got more of a solid future, even though Monero has an important future or perhaps no future. We'll see.
And here is our grand finale. Bitcoin versus Chainlink.
Oh, suddenly it becomes quite easy. It's got to be Bitcoin because, even in this day and age, as I said, Bitcoin is not just a brand. Bitcoin has also got a very strong narrative behind it. Chainlink is fantastic for what it does, but I imagine that, I know that there are competitors waiting in the wings. It's not an irreplaceable piece of technology, whereas Bitcoin, the brand, say it were to disappear tomorrow, I think you'd have a struggle trying to persuade JP Morgan and all the other sort of big institutions that are now sort of getting behind Bitcoin. I think you'd have trouble persuading them, we haven't got Bitcoin anymore, but how about Litecoin? How's that work for you? You know what I mean? It's I think Bitcoin. It's got to be Bitcoin.
At Sabio Trade, you can trade your favorite assets, crypto, stocks, Forex, indices. But here's the twist. You don't risk your own money. We'll fund you with up to $650,000 once you pass our simple one-step assessment. Keep up to 90% of the profit. Trade with professional conditions. Focus on performance, not deposits. Join thousands of traders already proving their edge and getting paid for it. So let's move on to our main part, to our main interview. You were once the face of market news on ITV and the BBC, shaping how millions of people understood financial markets. And now you're in the market yourself, where hype and narratives just move prices. So how do you filter through all of this noise, especially in crypto? And how do you decide what's real? I mean, as someone who's been on both sides of the screen, how can the rest of us learn to think critically and avoid being manipulated by the stories that others are selling?
That's a really good question. And actually, it did help me a lot being a TV business reporter for all those years, because I got to see how TV business reporters work, and how they work is a lot of the time by just like making stuff up. I can't believe I'm saying that out loud, but not making up facts. They stick with the facts. The problem is they're then asked to explain the facts. And what if they can't explain the facts, right? What if they don't know the reason or there isn't a reason. And this was the really kind of crucial epiphany for me, was realizing that a lot of the time when markets move, it's just noise. Okay, it's just random or virtually random. It's not some grand scheme. You know, people who are sort of either novices or have never really worked either in the financial industry or in the business journalism industry, a lot of sort of ordinary people believe that there are secret, clever manipulations going on behind the scenes all the time. And whilst that is true from time to time, you know, I'm not saying that the big whales don't sometimes get a little plan to kind of, oh, I'm going to push the price up hard today by buying tons of this or whatever, you know. Occasionally, or more than occasionally, I guess, things like that happen. But a lot of the time, the movements in the market are just random, and you need to appreciate that. And I appreciate that because as a business reporter, I'll give you, I put an example in my book, actually, and I'll sort of paraphrase it for you. A typical example of, let's see, of when I was a TV reporter, say my boss came up to me. Oh, yeah, here's the example from my book. Say a boss came up to me, a news editor, and said to me, Glenn, the market's down by 30 points. I need you to go on air and do a live right now, talking straight to camera like this, and explain in an authoritative way to people why the market is down 30 points today. And typically I would say to them, if I'd looked at, you know, all the news of the morning and there's just nothing significant going on, and I'd maybe gone on a few little forums to see if anybody's got any rumors. No, nothing. 30 points is not much on a stock market. Well, it depends which market we're talking about, but, you know, let's say it's not much. But the boss still wants to know, and they still want me to tell the viewers. So basically, they say, find a reason. That's what I've written in my book, the news editor. I said, there's no obvious reason why the markets are moving, boss. And they say, well, find a reason, go on air and tell them. You know, it's like your job's at stake here. So you have to come up with a reason. So then in this pretend conversation, I go on air and I say, the market is down 30 points today after the inflation figure rose once again to what some analysts are now calling a worryingly high level. Right? So I find, you know, it's always possible to find some analysts who are saying the inflation data has gone to a worrying high level. In the kind of analogy, in this hypothetical situation that I'm painting here, the idea is the market's gone down by 30 points. Yes, inflation has risen in the latest figure, but the key thing is usually, more often than not, it's kind of in line with analyst expectations. So everybody was kind of expecting the inflation figure to go up to where it was, and therefore the market has already priced it in beforehand, which is why it's only just kind of meandered down 30 points today, because basically nobody's that bothered. Everybody knew this was going to happen anyway, right? But I have to say, oh no, it's down 30 points because some analysts are saying this is a very worrying inflation level, because I've picked up on the few analysts who say that, even though most analysts are chill about the whole thing, right? Anyway, Absolutely. Second part of the story, the hypothetical story. 1 month later, my boss comes up to me. The market's down 30 points today. You know, the market's up 30 points. That's right. That's the second part of the hypothetical story. The market is now up 30 points. Glenn, tell people why. And I say, again, like last month, there's no obvious reason why. And he says, then find a reason. And the fact is, in this hypothetical situation, the inflation figure has come out once again. It's a month later. The inflation figure has gone up a little bit again. Everybody was expecting it again. So why has the market risen by 30 points? I go on air and I say, the market's up 30 points today after the inflation figure rose again to what some analysts are calling a healthy level. So basically, the month before, I say the market's down 30 points after the inflation figure rose because analysts are saying it's worryingly high. Then the next month, inflation goes up a little bit again. Everyone was expecting it, but the market's up 30 points. So I said, well, some analysts are saying this is a healthy level for inflation. Do you see? It's smoke and mirrors. It's just saying whatever needs to be said in order to justify what's happening, so that the poor TV reporter, who is usually not on a very high wage, despite the fact that they're wearing a shirt and tie, and you think, oh, this guy looks posh. This guy looks like he's in the markets and making a lot of money.
He knows everything. Yeah.
Yeah, he's not. He's poor. He knows nothing. He's probably 25 years old, like I was when I was saying things authoritatively on air. You know, it's just it taught me not to take the whole thing seriously. And then, as I learned more and more about the markets as the years went on, I came across so many top traders, people who'd made, you know, hundreds of millions or billions of dollars over a very long period. So they had really good long track records. And they all said the same thing, which was, I try not to watch the CNBC. I try not to watch the news. I try to kind of zone out from all that, because all it does is confuse you and ruin your sort of trading mojo. And I found that to be truer and truer. Yeah, you've got to keep half an eye on the news, because you need to know if something important is happening, or indeed if, you know, President Trump, say, has got a new approach to crypto or something. You know, I need to know about that generally. So I need to know about the big things. But what I don't need is the noise, the everyday noise. Oh, this has happened, that's happened. He said this, she said that. It will ruin your trading. And I see that the whole time, because people write to me, readers of my book, they write to me going, what do you think of this that just happened and that? And do you think this will affect crypto and that will affect crypto? And I just say, like, all these things you're mentioning, they don't even matter. They're not even in the game. They're not factors even, you know, just chill.
Seems like every question has too many answers.
Exactly. People like to complicate things. And as has been said by many different people many times over the years, the KISS rule, which I think was originally invented by the US military in the 1950s, KISS, K-I-S-S, keep it simple, stupid. Like, that goes for so many things in life, and it definitely goes for trading. That's find
wise.
That,
yeah.
You know, the top traders, the top traders aren't using Fibonacci and Elliott wave and this indicator and that indicator. You know, the top traders, they're keeping it simple. They might use moving averages, possibly. They might use RSI, possibly. But, you know, a lot of them don't even use those. They're just using naked charts a lot of the time, you know, and I use naked charts a lot of the time, or maybe with just one or two little helping indicators, but certainly not the vast array of complications that novice traders tend to employ.
You know, a little bit of off-top here. You know, I've always wanted to know, speaking of your boss, I've always wanted to know, did he ever ask you to use this special, you know, every time I watch British TV, British news, I hear that amazingly specific rhythm, tone, when the reporter starts sentence like this and finish like that. Yeah. Start like this and finish like that. Does this thing have a name?
It should, shouldn't it? It started when I started in radio news, actually. I was reading the news on the radio while I was at university. That's how I got into it, sort of by accident. I was hired by a local radio station because I met a bloke in a pub. That's why I got into journalism, because I met a bloke in a pub and I was a bit drunk and he was a bit drunk. He used to go to my university, but he'd left the year before, and he now worked for a big radio station. And he said, "Oh, they're looking for a newsreader. I reckon you'd be good for it." Why? I don't know. He said, "I think your voice, you've got a kind of, I suppose I talk a bit like that, up and down." Maybe, I don't know. But he thought I'd be good. So I went there, and immediately I noticed everybody talks in that way. So I started copying it. But then after a while, when I got into TV, I wanted to do it differently. I wanted to talk differently. So I started trying to talk in a more normal way. But the weird thing is, because everybody else talks in that kind of heightened fashion, it sounds weird when you go on TV as a reporter or presenter and don't talk in that way. It sounds like you don't care, like you're not enthusiastic enough.
Yeah.
So I found myself naturally saying, you know, well, the market's down 30 points today after the inflation figure rose again to what some analysts are calling a worryingly high level. Or, you know, I don't know, I'm exaggerating even more slightly than I did in reality, but you get the general idea.
Sure.
But what's really interesting, actually, is that since social media came along, since YouTubers started broadcasting, you see a real variation in styles. You see some people who are just like, "Hi, yeah, so okay, so we're going to do our usual thing today, and yeah, all right. So what's going on over there? Yeah, we'll talk about that, and then later on we'll have, you know." So some people talk in a really kind of almost more than naturalistic ways. Like they're really, really chill. But then there are other people who still use that old-fashioned kind of TV presenting style. And they're like, shall I tell you an absolutely incredible fact? Or whatever, so you get such a wide variety now. And I think that's great because it's really opened up the universe of styles. Whereas when I was, as I say, a TV reporter, it was like you had to do it like that. And if you didn't do it like that, then people thought you sounded weird.
So speaking of trading, sir, in my opinion, most people who leave their jobs to trade, they're just, trying to escape something like burnout or boredom, like lack of money. But you had a brilliant career in journalism, a public platform, a trusted voice. So what really made you walk away? Was it just the money you made, or was there something deeper calling you?
Yes, there was. There was actually a deep call. There was also a shallow call. The shallow call was, I hate getting up early in the morning.
Yeah,
right?
I can feel that. Absolutely.
Reason. My deep reason was that I wanted to conquer trading. If you read my book, The Crypto Trader, you'll see there's a story very early on about the beginning of my trading career where I made a huge mistake because I didn't know what I was doing. I lost my savings, and so did my friends who were all trading the same thing at the time. We all thought we were really clever and we're going to make a fortune, and we all lost our money. My friends all gave up, but I kind of had the bug. I was like, I can't let this thing beat me. Intellectually speaking, I felt, I suppose it was pride came into it. It was like, how can this thing beat my brain? No, my brain must beat the system. So I started reading every book on investing and trading, like all the classics, tons of articles, just trying to really get to the bottom of how to beat the markets. And that kind of stayed with me. So I was trading in my spare time for several years while I was working as a TV reporter. And there was one moment where I realized that it was difficult to do both, because I was trying to do both. And that meant a lot of the time I was checking my trading at work and that kind of thing. My bosses were pretty cool about it, luckily, because they must have seen. They would walk past my computer and I've got charts up the whole time when I'm supposed to be doing journalism, But I guess because I was a business journalist, they thought like, oh, that must be to do with his work. So, as I say, there was this one moment, and it was after the crash of 2008. It was in, I think, 2009. There was terrible riots because of the fallout from the bank bailouts of 2008. People were rioting in the Square Mile, which is in the city of London, where lots of the big banks are. And people started smashing up the windows of the Royal Bank of Scotland, which was, one of the most venerable banks in Britain's history. And they were smashing the windows, and the place was going crazy. And I was right there in the thick of it with my camera woman, and she was going, "Get in position, Glenn. We got to start filming. Look, I'm filming the windows. Right, get in front of the window and say your thing." She turns around. Where am I? I'm standing in a corner on my BlackBerry, because I still had a BlackBerry back then, and I was like trying to trade, and like, oh no, I've just got to close this position. Oh, hold on, and I just need to look at the DAX in Germany. Oh God, that's going back. And she was going, "Glenn, get in." It was like she was going crazy, and that was a kind of seminal moment for me, because it made me realize, a lot of the time I can do both things. I can have half an eye on the markets while I'm also doing my job. And frankly, I'm not a day trader anyway, so it's not like I need to be staring at it all day long. But nonetheless, you still kind of, it was taking too much of my attention, is what I'm saying. Plus, by that point, I was starting to make more money trading than I was from my job. And whilst I loved my job, because like you said, I got to do some cool things. I interviewed 3 British prime ministers.
Wow.
Amongst other things, loads of famous, celebrities, Leonardo DiCaprio and Will Smith. So, it was a fun job sometimes, but a lot of the time it's just work. It's just everyday work. I know it probably doesn't sound like that, but those were the highlights. Whereas there were a lot of
it sounds like amazing memories, sir. It sounds absolutely mind-blowing experience.
There were some mind-blowing experiences, and there were some very dull experiences, like any job. I mean, look, you see prime ministers, right? And I'm not comparing myself with a prime minister, but the point is, you see a prime minister, right, or a president, and sometimes they do amazing things. They're shaking hands with all the most fun and exciting and rich and glamorous people in the world. But then a lot of the time, they look like their job is not much fun. And I guess it's the same with any job that looks glamorous, like mine was. A lot of the time, the behind the scenes stuff, there's a lot of grind. So I'm not saying it was a bad job by any means, but I just started realizing that I was making more money from my job, from trading, than I was from my job. And whilst I maintained the two together for many years, and frankly, I didn't really need to be staring at the trading screen while I'm at work. That was a luxury that I shouldn't have afforded myself. I should have just done it when I was at home, because I'm not a day trader, and I take longer term trades and medium-term trades. I'm holding positions for at the least days, sometimes weeks, sometimes months, or even longer. So I didn't need to be staring at my screen every day, and I probably could have combined the two jobs. But like I told you with my story about the Royal Bank of Scotland and all of that, there are times where I just felt this is wrong, and I should either be devoting myself to that or to that, and not have my mind on both. So that kind of changed my mind. But I stayed in my job for a few more years, actually, until I'd convinced myself that I could make really good money trading year after year, that it hadn't just been a fluke that I was making more money trading than through my job. I needed to prove to myself that I could do it consistently. And then eventually I gave up my job in the 2010s. So about a decade ago.
Sir, some people call crypto the biggest bubble of our time. Others believe it's the inevitable future of money and value transfer. In your view, what's the most realistic perspective on crypto adoption over the next, let's say, 10 to 20 years?
I think stable coins are now at the point where they're probably the first thing in the whole world of crypto that really seems now almost certain to become a big deal. Do you know what I mean? It's like everything else, whether it's Bitcoin or DeFi or whatever, it's always a bit like, well, hopefully this will become a big deal and take over the world, or maybe something will go wrong and it might not work out because there's all these different reasons it might go wrong. Stable coins now have been adopted to such an extent, or at least in principle adopted to such an extent by the traditional finance industry, that it seems, and by many governments, bringing in legislation, it seems almost inevitable now that stable coins are going to become a big feature of the global financial system in the future. So I would say they are pretty much a dead cert at this point. As for other aspects of crypto, I think the advent of stable coins will help DeFi to kind of slip in through the back door to some extent, because, there are obviously deep connections between stable coins and DeFi in all kinds of different ways. So we could well see a lot more aspects of DeFi taking off in a bigger way on the back of stable coins, particularly under the current US administration, as long as it continues to be as kind of friendly to crypto as it has been. Bitcoin is still a little bit up in the air. I'm talking about, I say up in the air, it's obviously a massive asset now in the world, but in terms of world domination, I think there's still a big question mark, obviously, because we don't know if is the dollar going to collapse through too much debt and all the rest of it. Even a few years ago, I thought that was still a fairly long shot, but as time goes on, it's becoming clearer and clearer that as I think Lynn Alden, the economic analyst, puts it, nothing stops this train, as in the debts just get bigger and bigger. And look, Elon Musk, he had a good go at it. He did his best, but he failed. Even Elon Musk couldn't defeat that debt. Not even defeat it. He couldn't even make a proper dent in it, and he tried. He did try, but the forces of whatever, the forces of inertia, are just too strong. They're against him, and that even included Trump when it came to the crunch. So yeah, I think there's a greater possibility than there ever has been that indeed at some point the financial system will go into some kind of crazy inflation and currencies will collapse, and maybe Bitcoin could take over, or maybe gold. But Bitcoin feels like more of a currency to me than gold. I know that's a bit of a value judgment, but you know, you could send it across borders easily. You don't have to put it in a suitcase. Tokenized gold, I suppose, could be the new big thing. Anyway, this is all speculation. Who knows exactly what will happen in the future? But as Ray Dalio recently put it, it makes sense to have some Bitcoin/gold tucked away in a sort of diversified portfolio. If you're a long-term investor of that nature, which I'm not. I'm more of a trader. I trade the cycles. I buy each Bitcoin cycle near the beginning and I sell near the end, over and over again, because that way I don't have to go through 80% crashes. Yay.
So your book, sir, The Crypto Trader, it became a bestseller and now has a freshly updated second edition. May I ask you, what exactly did you feel absolutely had to change? Was it the market that evolved, or you as a trader? What's the biggest shift between the Glen who wrote the first edition and the Glen who rewrote it?
I mean, a lot of things changed in that time, you know, because I wrote the book in 2018 and it came out in 2019. And you have to remember that, I mean, back in 2018, what did we have? We didn't even have DeFi. You know what? DeFi didn't even exist as a word. It wasn't even, or an acronym or whatever you want to call it. Nobody had said DeFi at the time I wrote the book originally. So that's how much things have changed. I think it was first mentioned in a forum of some kind or social media in August 2018. So I'd actually written the book before DeFi was even coined. What else? Well, I mean, Binance was barely even a thing. Luckily, I wrote about it in my book. It's like, there's this exciting new exchange called Binance, and here's what it's all about. So as you can imagine, anybody reading the first edition of my book, I was in 2025. I was starting to get slightly embarrassed that they'd have to read sentences like, "Oh, there's this interesting new exchange called Binance," or whatever. It needed a lot of updating. But I think one of the main things that people can learn from the new edition of my book as opposed to the old one is through all of the history of crypto that I go through, that has happened since 2018, including, and very importantly, the bad stuff, right? The crypto winter, FTX, Sam Bankman-Fried, all of this stuff. People need to know about this stuff because it's how they can understand about the cycles, right? Because every time there's a massive boom in crypto, it's like everybody they lose their memory. It's like they've got amnesia because they all go, it's all going to go up forever. Everything's going up. It's never going to come down again. And I'm like, well, but what about the last time? And they're like, oh, no, 2018 was a fluke. That was just bad. That was before everybody knew. But this time it's going to be really great. And it will just go up and up forever. So now at least I can point to another crash, which is, the crypto winter 2022, because in 2021, nobody expected it to crash. Everybody was telling me it wasn't going to, apart from, a few old men. You see, that's the thing. There's just a few old men who've been around in the markets for 60 years or whatever, and they go, yeah, it will crash at some point. Yeah. And, I'm slowly turning into one of those old men. But the truth is, markets, they do go in cycles. And if you want to make the super money like I do, then you don't want to sit through the stupidly huge crashes that, if Bitcoin goes down 75, 80, 85% in a typical crash, let's not forget most other cryptos go down 90, 95%, even 99%. People talk about, oh yeah, but the little cryptos are coming back now. In many cases, it's not the same ones that were there 5 years ago. A lot of those just cease to exist. I give examples in my book of some of my best trades. Some of my best trades ever were in cryptos that no longer exist, because I sold them and then they crash and then they carry on crashing and then they don't exist anymore. The whole operation goes kaput.
You've learned about markets from so many angles: reporting in the newsroom, reading books, placing real trades, taking real losses. I'm curious, what shaped your understanding of finance the most? If you had to rank the biggest influences, I don't know, let's say college, journalism, mentors, markets, wins, losses, what really taught you how money actually works?
I think I'll say two things. First of all, the story that I give in my book, which for people who've read it, I won't bore them with too much, and people who haven't read it, they should read it. But I'll give a short version, which is I talk about Gameplay, which was a UK share. That's the one I mentioned earlier that me and my friends all bought. And the point is, what we did was what I now call the Moron Rule. Okay, I think I've termed that. I don't think anybody else said it before me. I think it's my invention. The Moron Rule, right? The Moron Rule is you're a moron if you don't follow the Moron Rule, or if you do follow the Moron. I haven't thought this through, have I? Anyway, the Moron Rule is that you keep putting more on as the thing goes downwards. And that's what I did with Gameplay, right? So it was shooting up. We all were buying it, and my friend worked for the company. It was a pioneer of online gaming in the year 2000. Like, how brilliant an idea is that? That company's going to go through the roof, surely. Online gaming in the year 2000, they had it made. But no, the problem with every industry that booms is that you never know which of the companies that are going to make the money out of it and which ones are going to go bust. It was the same, same since ever. People talk about the railway boom in the 19th century. Everybody's buying railway stocks, but most of them went to zero, and some of them did really well. But, most people ended up in the ones that went to zero, I guess. And it was kind of similar. So anyway, the share goes up. Yay, that's fantastic. We're all so rich. Me and my friends congratulating each other. And then the .com crash starts and it starts falling. My friend phones me up, because we used to still phone each other up. And he's saying, you've got to buy more because it's going down. So now it's more of a bargain. So I put more on, right? More of my savings. And then it goes down further and I put more on because he phones me up again. It's even more of a bargain. Like the further down it goes, the more of a bargain it is. The thing that nobody tells you during all of that is it can go to zero. In the case of Gameplay, it didn't actually go all the way to zero. It went very, very low. It went to 1p in British pounds, so that's like 1/100th of a British pound, and I think at its peak it had been £10. So I lost like 99.999% of my money or whatever. The company was bought out for 1p, by the way, so there was no chance for it to go back up again, because just all the shares were bought amazingly cheaply by a private buyer. And that was that. So that was really, really important in my growth as a trader, because most novice traders lose all their money by buying something. They might have made loads of money initially. They do, especially in crypto. They make tons of money. They show off about it on social media, and then they make one bad trade where they put everything. They go all in on something,
and
whatever
it's all gone.
To be, and then say a meme coin, and then it crashes and it crashes and it crashes and crashes, and they keep putting maybe more of their money into it until there's nothing left. And then their whole account is gone. So that was the main lesson that I ever learned, was the most important thing is to hold on to your capital and to stay in the game. Okay, because once your capital's gone, you're not a trader anymore. You're nobody. You're a guy who's looking for a job. He has to go and find any job in the supermarket, right? So it's very important. Hang on to your capital. You'll always be able to make another trade another day. Don't just be obsessed with one trade that it has to succeed. Sometimes you just got to cut it loose, give up, take your little loss, and always has to be a little loss. Don't let a little loss turn into a big loss. That's kind of like my number one trading rule. And that's the number one trading rule of most successful professional traders, full stop. I did say there would be a second thing. Sorry, I did say there was a second thing that influenced me. I'll just mention briefly a mentor, because you mentioned the possibility of a mentor.
Sure,
Ed Seota, who was a trading legend. He's mentioned in the Market Wizards classic books, or not even mentioned. He has a whole chapter where he talks about his trading style. I discovered him in about 2000, 2001. He had a FAQs website. He had just a website called FAQs, and it was like, ask me anything. And I asked him a lot of things. You know, you'd email him to ask him things. There was no facility to kind of write on the screen. So you had to email him, and then he would copy and paste the email onto the screen, get rid of your name and address, which was kind of him, and just like answer the question. And I sort of became, I guess, semi-friendly with him that way over the years. I was one of his main acolytes. And the guy, as I say, is a trading legend, one of the first people in history to invent systematic trading. In the 1960s, he was using punch card computers to program the most basic trading systems you can imagine, which made him an extremely wealthy man.
Speaking of harsh reality, you know, crypto feels like a modern-day fairy tale. Get rich quick, no effort needed. But you've stayed one of the few calm and realistic voices in all the hype. Do you think the crypto myth feeds into a kind of modern people infantilism? I mean, where people aren't acting like adults with a plan, but they're just chasing luck, like kids chasing the pot of gold at the end of the rainbow.
Yes. Next question.
All right.
No, you don't have to go to the next question. But seriously, yeah, the answer is just simply yes. It's like, you know it, I know it. People are chasing impossible dreams. The problem is, the analogy that I like to make, I actually just mentioned working in a supermarket, right? You've got to remember that every time there's a big, say, crypto boom, you'll have, out of every 1,000 people who go for the gold, like you're talking about, and like buy the meme coin and put all their money into the meme coin, and we're going to make it to the top. There's always a winner, right? So there's always someone to advertise the strategy. There's always somebody who can go on a big podcast and go, well, I know this sounds terrible because I did it once. I turned £5,000 into £10 million or whatever. I mean, I got one of those stories. It's on my website because I wrote an article for the Times years ago about how I turned £3,000 into £100,000 during the 2008 crash. So yeah, I have one of those stories, but I do make the point at the end of the article that I didn't then think I could repeat the trick. Instead, I decided, right, I was lucky. Now I'm going to be a sensible trader. I'm going to learn how to kind of, position management, risk management. I'm going to be sensible from now on because I was lucky to get out without losing my stake, right? What you don't hear about with these stories of I turned this into this is that for every one of those people, there are 1,000 people who did almost exactly the same thing and are now stacking shelves in the supermarket. You don't see those people. They're not, where's the big stories in the papers every day? Like, here's me stacking shelves in a supermarket because I tried that meme coin thing and it went wrong. And what's more, they're not just stacking shelves today or next week, they're stacking them possibly for the rest of their lives, okay? Because like I said, once you lose your stake, once you lose your capital, it's gone, right? And then you've got to build it up again. How are you going to do that? How are you going to build it up from nothing to a point where you even have thousands of pounds to bet on a meme coin? It's not easy. If you don't have the stake, you've got to keep your stake, because otherwise you've got to work for God knows how long in a supermarket, even to just build up a few £1,000s in savings.
Learn from seasoned prop traders, practice-driven, psychology-aware content, one-on-one mentorship, and more. Sabio Academy is where serious traders grow, so start today. You, sir, have said you like to ride the waves of irrationality, but in reality, what does that require emotionally, and what does that require mentally?
It's very difficult, and that's a whole massive topic that I've got chapters in my book devoted to that, because the psychology of trading makes a huge difference between being a winner and being a loser. Even if you know all the rules, you've read all the books and all the rest of it, if you allow your emotions to dictate your actions too much, then you will come a cropper, as we say in the UK. You will eventually lose. So it's really, really important to be aware of the psychological pitfalls, to understand the emotions that you will feel in different situations, and then because when you're aware of them, you're able to kind of get in the middle of them, if you see what I mean. You're able to get between them and the action. That's the important thing. It's okay to have strong emotions. It's not okay to act on those emotions in the markets the whole time, to act out, to sort of live your drama through trading. Trading ideally should be a quite a boring activity. Not incredibly dull, but it should be quite kind of standard and I'm going to do this action and this and this, and here is my process and blah, 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 blah. That's how people make a load of money at it. You don't see Ray Dalio, he's just an example because he's the guy who I mentioned earlier on. You don't see him going, yeah, I'm going to buy this meme coin, I'm going to do so, I'm going to become even richer than I am already. These people don't act like that. They don't behave like that. They don't think like that. Okay? It's just not the way it's done if you want to do it properly. So you need structure and you need discipline, and you can learn all these things. That's the beauty of it. Even if you're a very emotional person, and I'm a pretty emotional person, you can still get a handle on it enough to make money. And that's the important thing. As long as you're aware when you're about to act out, you're feeling really angry. Oh, I lost money on that. Oh, what you then don't want to do is revenge trade. I'm going to make all that money back. You've got to take a step back, calm yourself down, even if that means taking a day away from the screens or 2 days or whatever. Just, you've got to chill yourself out before you come back to it.
Can you think of any recent hype-driven crypto predictions that totally missed the mark?
Hype-driven crypto predictions. There are so many, but one that comes to my mind, of course, is NFTs. I just remember during arguing with followers of mine I think it was on Twitter at the time. I was arguing about NFTs because they were saying, yeah, we know that most of these digital JPEGs are not going to come to anything, but what about the blue chip NFTs? Do you remember this? People talking about blue chip?
Yeah, kinda, yeah.
Like as if they were IBM or something, blue chip NFTs. I just found it slightly ridiculous, but Bored Ape Yacht Club came under the heading of blue chip NFTs. And just out of curiosity, yesterday, I happened to be looking back at floor prices for the Bored Ape Yacht Club, and they've come down so much. I'm sure there are still there are probably a few, I haven't checked CryptoPunks, I'm sure there are some CryptoPunks that are still worth a lot of money, but a hell of a lot of those things have come down ridiculous amounts, like 99% of their value lost, that kind of thing, was the impression I was getting from the prices of some of those BAYCs. But I remember the heady days when they had these big meetups in posh nightclubs, and, them days are gone. Yeah, NFTs.
All right, if chasing hype isn't smart, what is? What should a thoughtful crypto trader actually pay attention to? Beyond charts, beyond price action, what real factors move the market?
All right, well, you've got to learn about the technology. Obviously, anybody who buys a crypto and doesn't understand the technology is making a mistake. I'm not saying they can't make money out of it. You can make money by chasing the charts and knowing absolutely nothing about individual cryptos, but it helps to know what you're trading, because then you know what pitfalls to look out for and what pitfalls you may encounter along the way. Apart from that, regulatory things, very important. This is what I really keep my eye on news-wise, is what's going on the regulatory front in the US, in the UK, in Europe, in Australia, Canada, Japan, China. I just keep a general eye on, are there any major updates going on there? Are there any major new laws? Because there are often new laws coming in to regulate crypto. And this used to be a pretty depressing way to spend my time because it was all just people who were against crypto and trying to stop crypto. But obviously, since the new US administration came in, not just the US, but actually the EU and the UK are starting to sound a lot more positive about crypto as well, and, enabling it. And we want to be a welcoming kind of place for crypto businesses and all the rest of it. So, they're all getting on board slowly, but the US obviously has just done a 180 on that. They're a completely different attitude than the one that they had under the previous administration.
You, sir, famously shorted the banks during the 2008 financial crisis. But if you were to see a 2008 moment forming in crypto or traditional markets today, what signs would you be watching for?
I think one major thing that I'm watching for even now already is disappointment about AI, because huge amounts of investment have poured into the markets in recent years, chasing the AI dream. And I'm talking about the stock markets as well as the crypto markets, obviously. And because so much money has been poured in and there's so much expectation of success for these companies in making themselves far more productive. The idea is that so many companies are going to be able to sack tons of workers because they've got, practically free robot help now, or not robots, but, AI help. And if that results in disappointment, which I think it's looking like it might do, then the markets could get a very nasty shock at some point. It certainly hasn't sunk in yet. The markets are still roaring away, expecting great things of AI. Now, I do, of course, because I'm not stupid, I do, of course, believe that AI is going to change the world in enormous ways in the next decade or two. But that doesn't mean it will happen immediately. And that was another big lesson I got from the dot-com crash in 2000, because companies like Amazon, their share price went to almost nothing. Why? Well, is that because Amazon didn't have amazing potential to be one of the biggest companies in the world? No, not at all. It's because it disappointed in the short term. It wasn't providing the quick results that all the people who poured in investment money were expecting. Perhaps we could get the same thing this time. If AI is disappointing, if companies are saying, yeah, we're still not quite up to the mark, I don't think we're going to be able to sack people this year to make way for AI because the AI isn't good enough. If that happens, that doesn't mean AI is rubbish and is never going to transform the world. It just means it's not going to happen this month or this year. And that the markets could take that very badly, just like they did in 2001.
We all know that altcoins often come with both, explosive potential and massive hype. But when you're scanning the market, what signals help you decide which ones are worth your attention and which ones to ignore?
Well, first of all, I'm always looking at the technology of different coins. And of course, I favor the ones that I think have great potential. But I have my eyes open to the world, and I know that just because something has great potential technologically doesn't mean the world is going to necessarily see that potential and send its price sky high. So that's why I pay so much attention to charts. Charts are desperately important in the world of trading because they show you not just where hype is, but just where goodwill is, So you can have a crypto that's really great technologically, but for whatever reason, people they don't vibe with it. I know that's a really vague thing to say, but it's just so true, particularly in crypto, but also in the stock market as well. It's very important that the feelings of people are positive and that they're moving the price in an upward direction, not a downward direction, right? So like Ed Seota used to say, I think one of the best phrases I ever heard him say was, sometimes you just got to put a chart up on the screen and just step back to the other side of the room and just look at it from a distance and go, ask yourself, is that going up or is that going down? Sometimes because you get so caught up in the nitty gritty while you're kind of working out whether to trade something and what price should I buy it and where would be my stop loss. And, sometimes you just got to ask yourself, is this in a bull market even? This particular crypto, is it going up? Is people's excitement behind it? And you can often tell that just from walking to the other side of the room and just having a look at it from a distance.
Like an artist, yeah. So
Exactly.
may I ask you, sir, which altcoins do you actually have in your portfolio right now at the moment?
I have a mixture, and I haven't actually revealed the names of specific altcoins that I'm trading at the moment because I don't. What I often find, I'm often happier to talk about these things after the event because what I discovered in previous booms was that it messes with my head a bit when I'm discussing with my followers or on a podcast or whatever what I'm doing right now. Because then people start questioning me. They start like, but why are you doing, haven't you heard the news that blah, blah, blah is happening with this coin? And it makes me kind of question because I'm only human, I can't help but be influenced by if people are talking in my ears, however much I try and ignore that and zone out. I'm not Buddha, I have feelings that I can be manipulated just like everyone can. So I tend to keep my own counsel, which is why I talk about a lot of my past trades in the book, but they're my past trades, and actually sometimes I talk about my past trades on social media as well, or in podcasts, but I don't like to talk about the positions I've got open right now, because I know people are going to start contacting me and asking me 100 questions and making me feel bad. Some people will not like those cryptos and they'll be like, yeah, you're making a big mistake there. I really think you should sell it right now. And then, then I go to bed thinking, oh, but what if he's right? What if he knows more about it than I do? No way.
That's fair.
It's
That's
not for
fair.
me, baby.
I can feel that. All right. So as a journalist, you had to stay emotionally detached from the stories that you reported.
Yeah.
But now, as a crypto trader, what techniques do you use to stay emotionally neutral when your own money is on the line?
As I said before, trading should be a bit boring. There is one really useful tip, again, that I picked up from Seota. This guy was great. It's really sad. I don't know I say it's really sad. I mean, he got old like all of us do, but I'm not sure what's happened to him. He hasn't written on his website for a few years now. He just kind of disappeared off the radar. I'd love to know what he's doing now, but he's a very old guy now. He must be at least in his 80s. But anyway, he had this great phrase, which is, if you're having trouble sleeping at night, then you should reduce your size. Reduce your size to the sleeping point, he put. So it's like, that's a great way of managing your emotions. If you're feeling really emotional about a trade, chances are you've just got too much money riding on that trade for your own self to handle. And that's different for everybody. Some people can handle a lot more stress than other people can, but you've got to know your own limits, because if you start cracking up mentally or emotionally, you're going to make some really bad trading decisions. So you need to reduce the size of your position to the sleeping size, to the point where you can sleep soundly. You can still be a little bit worried. You're allowed to be worried, but you just mustn't be panicking. If you're panicking, that's not good. That's not a good trading mojo.
So in your book, you warn people about pump and dump schemes. In your opinion, what are the biggest red flags that something's not organic?
Well, if a price goes up enormously in a very short space of time for no good reason, then it's probably not organic, unless there's a good reason, because sometimes there is. Sometimes the company or the project has suddenly gone, look, we've made this enormous breakthrough, so then it's fine. Then it can be pumped. And quite often you'll get pump and dump people involved in those legitimate moves as well. So it can be confusing, because you can have a bit of both. You can have a real move, but at the same time, it can be pumped up even further by the pumping people, who then dump, if you see what I mean. So,
yeah.
You have to be on the lookout, even during legitimate moves, for people overhyping it and taking it to extremes that it really doesn't justify. And of course, that's made extra difficult with crypto because there aren't much in the way of fundamentals like you have with stocks and shares. There aren't the same revenues and profits that you can kind of base valuations on. So it's much easier for somebody to just go, oh yeah, but this price is justified. It's this meme coin is genuinely worth $300 billion. It's fine. This is normal. Yeah. But you have to, I guess, how do you do it? You just need to go out in the fresh air, take a walk, take a bloody breath, and ask yourself, does this make any sense that this piece of crap is worth $300 billion? If not, then that doesn't necessarily mean sell it right now, but get ready, watch that chart. And when it starts going, it could really go straight down. So you've got to get out at the right time. If you're going to play that dangerous game, you've got to really keep a close eye on it.
May I ask you, what's your honest take on the rise of prop trading firms like Sabio?
It's a mixed bag. So there are some good prop trading firms, and there are some that aren't so good at all. I do like it when a prop trading firm doesn't have too many restrictions in terms of how you trade. Because like I say, for example, I'm a trend follower, which means that, you know, if you take a typical chart that kind of, say it's going down, it's in a bear market, say it's Bitcoin, right? It's going down, then it will go along, maybe it'll take one last dip down, and then it comes back up a bit, and it goes along sideways some more, and then it starts breaking out. And I'm thinking in my head, I've got 2020 in my mind here. There was August 2020 was one of my best buys when it started breaking out. And I bought it, and I talk about this openly on my social media. So there's the proof is there that I was really into Bitcoin right at that moment and saying, oh, it's breaking out. So I bought it right there. And then what I do is I follow it all the way up. And then after it started going over the top, that's when I sell. So I don't sell on the way up, because if you sell on the way up, you don't know if you've sold far too early, right? And then you're tempted to get back in again, probably right at the top, and then everything's ruined. So it's better. This is why trend followers, you know, this is not some way of trading I invented. It's been going on for decades, even centuries, this method of following the trends. And as we say, follow the trend until the end when it starts to bend. Right? And then you get out. It's a method. It's not the only method in the world, but it's one that works really well for me. And I talk about it obviously in my book because that's the one that so many top traders tend to use in various different ways. There are lots of variations on it, but that's the general idea. Sorry, I forgot. I've got away from your question. What was your question?
What's your honest take on the rise of prop trading firms like Sabio?
Oh, right. Yeah, exactly. And as I say, that's how I like to trade. And so any prop trading firm that didn't allow me to do that, I would personally have a problem with. But that doesn't mean that they're necessarily, telling people to trade in bad ways necessarily. It's just that when you're a trader developing your craft, it's useful to be able to experiment with different ways of trading, try out different ideas with small amounts of money. I like the fact that with prop trading, you know, there are often A, small amounts of money involved. B, it doesn't necessarily mean that the novice is going to lose a load of their own money as long as they're with a good prop trading firm that doesn't force them to hand over all their money. You know, so there are good ones and bad ones. I can't comment actually on Sabio Trade individually because I have purposely, knowing I was going to do this podcast, I purposely learned nothing at all about it.
That's fair, yeah.
So that I don't have an opinion at all on Sabio Trade. I'm not biased in either direction.
All right. In your book, you talk about focusing on the 20% of trades that yield 80% of the results. But how do you actually identify which trades are worth that focus? I mean, does that mean sitting out for long periods waiting for A+ setups?
In crypto, it does, because I wait out the crypto winters, and those are long. I mean, we're talking
long winter. Yeah.
We're talking a good few years without almost any decent trading opportunities sometimes in crypto, which is why it makes sense that I still also trade stocks and commodities and treasuries and all kinds of things, because the times aren't always good for making money in crypto. Now, sometimes in a bear market, I get itchy fingers like anybody else. I'm not, like I said, I'm still human. So I do sometimes take trades in bear markets. And sometimes I even make money in bear markets from my trades. If you've got like a bear market rally, a massive, like there was one in 2019 that sticks in my head because it was such a big bear market rally. I think the market went up something like a few 100%, I think, but it was still a bear market rally. It wasn't a new bull market, but there was money to be made there because the market was going up so much. So there are opportunities like that, even in bear markets sometimes, but they're just fewer and further between. You have to be a lot more selective in bear markets, because otherwise you will just end up thinking every little, say you've got a bear market that's going down, 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 down. Oh, it's gone up a bit. Oh, it's down, 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 up a bit. If you're too into trading crypto, every time it goes up a bit, you're going to be buying. And then you'll be selling again when you see that, oh, no, we're still in the bear market. Oh, it's gone up a bit. Oh, I buy. Oh, no, it's going back down. Do you see what I mean? It's very easy to do that thing that I talked about, putting moron. Follow the moron rule. Don't be a moron. So whilst trading in bear markets can work sometimes, you just got to be a lot more careful, a lot more selective, because there will be a lot more false opportunities on the way down. Whereas when you're in a bull market on the way up, there's just opportunities everywhere. So yeah, it does make a lot of sense to kind of wait and be patient and trade other things in the meantime.
But how do you handle boredom or temptation?
Well, like I say, by trading other things, that helps a lot. If you've got other things to take your mind off it, or if you've still got a job, that's the thing. It's harder for me because I gave up my job to be a full-time trader. But for anybody who's still got a job, just get on with your job. Get on with your job. Don't worry about crypto while there's nothing happening. Or actually, even better, during the bear markets, just read my book. No, read anything you can about trading in general. Read the trading classics. Learn about how the great masters of trading did it. All the various different methods they use, many of which are similar to mine, but some of which are quite different. Right? Warren Buffett traded, or still does trade, invest. I suppose he wouldn't like the word trade, in a very, very different way from how I do it. You could actually call him a very long-term trend follower, as in he will follow a trend for years and years, even decades. Like he did with, say, Coca-Cola or Gillette, things like that. So I guess what I would say is, find yourself other things to do. Don't try not to be tempted to overtrade during the bad times, because the bad times are called the bad times for a reason. You're not going to make your fortune in the bad times.
All right, let's change topics a bit. Let's talk strategies. What are your, let's say, top 3 favorite crypto strategies?
Well, trend following, and trend following.
I know that.
Anything else? I'm always looking for different shortcuts, which is just, again, a human instinct. Like, is there perhaps a little thing that we could do with looking at options prices? Like I've been experimenting with that recently in collaboration with a guy I know who runs an exchange that deals in options. And I say only looking, because I'm not trading them yet, or I might not trade them at all. The idea is to look at the patterns of options pricing and to try and work out if there is any predictive ability there for the crypto, like spot prices for crypto. And I'm still unsure about that one. Sometimes it feels like there are really obvious tells for the future. Other times it's very disappointing. So I haven't managed to systematize that yet and make it, a proper system. And there are other things like that. For example, I'm very hopeful, and have been since I wrote about it in my book in 2018. I'm very hopeful that at some point, social sentiment will become a really good predictive tool. And lots of people have attempted to make social sentiment indicators and this kind of thing. None of them have yet really hit the mark in a major way. There's an academic paper. There's an academic, actually, a guy who I'm following quite closely because I'm hoping that he may come up with the goods quite shortly. He's working on an algorithm to try and take all the sentiment and work out, basically just to get an early warning signal. Oh, people, there's something bubbling under. People are getting really interested in blah, blah crypto. And then you can quickly buy it before the price rises. That's the idea, because it's too late after the price has already gone up because everyone was excited about it. The idea is to work out, are some people getting excited about it before the price goes up? And can we spot those people doing that on a consistent basis in order to buy the cryptos? I think there's a lot of hope for that kind of strategy. But as I say, I still haven't found the perfect tool to do that yet.
All right, let's take a look from another angle. What part of your strategy do you believe is least understood by other traders who actually follow you online?
I would say position sizing. I think a lot of traders don't realize how, especially novices, they just, they go all in, or they'll put large percentages of their portfolio into one crypto. They don't realize that the numbers game is against them. It's a numbers game, right? You're effectively tossing a coin over and over and over and over again. Maybe the coin is loaded if you're good. If you've got an edge in the market, then maybe the coin is more than 50% likely to end up on heads. If you see what I mean? Like, you're more likely to win than lose. That's the position I'm in because I have a good trading strategy. I'm more likely to win than lose, but I'm still not that much more likely to win than lose. That's the breaks. That's how it goes. You're going to have loss after loss after loss. There's no way to avoid that. And that's why it's so important to keep your losses short, to cut your losses short, rather, to not allow big losses to build up, to cut your way out of trades when you've still got small losses, because small losses you can cope with, big losses will eventually ruin you, right? Because as I say, it's a numbers game. You can have lots of losses. And position sizing. If you've got positions on that are just too big as a proportion of your total portfolio, and one of them just suddenly crashes, you could lose a huge chunk of your portfolio in one go. And that's, again, how a lot of traders end up going bust, particularly if they've got leverage on those trades. Then they're really in trouble if the thing suddenly crashes. So, it's all very well thinking, yeah, but my one's not going to crash. It's going to be fine. I'm sorry, but you're tossing a coin over and over and over and over again. And sometimes you're going to get not just a big loss, but a whole string of losses. You're going to get tail, 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 tail. It's all going to go wrong all at once. And if your positions are too large, you're going to lose all your money.
Do you personally believe that every trader needs a pain moment, like, I don't know, a blown account, a huge drawdown, to become mature? Or can't that phase be skipped?
Well, I used to think that they needed that, like I had my gameplay experience back in the year 2000. But then I wrote The Crypto Trader, and I had the wonderful experience. This is literally the best feedback I've had about The Crypto Trader, is people contacting me during the depths of 2022, 2023, right? Like those years where Bitcoin and all the cryptos had really tanked, and all the newspapers, again, like the FT, Financial Times, saying, is crypto dead? Is this it now? Is it gone forever? Like they always do during every bear market. And I got these wonderful emails from people going, thank you so much for saving me from losing all my money. So they weren't saying thank you for making me incredibly rich. They were saying thank you for stopping me becoming incredibly poor. And those were the best emails I got, because those people had, followed my social media. They'd seen me call close to the top in 2017. This was one of my best calls in 2017. In fact, actually, that's why I got offered a publishing deal. That's why they asked, the big publisher asked me to write a book, because they had heard about this Facebook post. It was Facebook back then. Facebook post where I warned everybody right at the top of the market in 2017. I was like, warning, this chart looks like it's gone wrong. We've had this beautiful parabolic rise, and then suddenly it was broken. And at that point, I warned everyone. I said, look, when you have a big break like that, you don't know for sure that it's going to carry on downwards. Usually you get a bit of a rally. So let's see what happens during that rally. And indeed, that rally turned out not to get as high as the previous high, and it started meandering downwards again. And that's when I started selling all my crypto at that time. Likewise, I did something similar in 2021. And so that's how all these people knew, I didn't tell them to sell. I just told them, I don't like the look of it, and I'm starting to sell my stuff now. And a lot of them took that as a warning and started getting out near the top, saved themselves losing like 85, 90, 95% of their money. So that means, I guess, that they did skip the painful process that I originally went through, which is very nice for them.
If you lost, let's say, if you lost all past performance records and P&L, how would you rebuild your identity as a trader?
I would just carry on where I left off, and actually there's a good example of that. Peter Brandt online. Have you heard of him? Peter Brandt.
I've heard.
Yeah, he's a trader who's he's an old man now. He's almost 80, and he's kind of wrapping up his trading career. And he used to make huge profits at various points during the 1980s, particularly. And then basically during the 90s, he had a real nightmare. And there were a few bad years for most traders in the early to mid 90s. And he was one of those people. But of course, at the time, he didn't really realize that everybody's having a bad time. He thought, it's just me. There's something wrong with my trading technique. And so he gave up trading for an entire decade. Okay. And then he picked it up again. He came back to it and was like, right, I'm starting afresh. So I guess what I'm saying is, if I lost my entire trading history, it wouldn't really matter hugely. It wouldn't matter enormously, because I would just start again from scratch using the same tried and tested trading methods that I use now, and I know they work. As long as I still have money. God, if I didn't have money, then yeah, I'd be stacking the shelves in Tesco along with everybody else.
All right. Is there, let's be honest, is there a mistake you still catch yourself making even after all these years of discipline? I mean, how do you work with it now instead of fighting it?
All right. There's a great quote from a guy I really respect. He's a trading coach called Stephen Goldstein, who lives in the UK. And basically he writes in his book. No, he wrote this online. He wrote it on social media. He works with great traders all the time. He's coaching top traders, like some incredibly successful people, but, helping them with their mindset. And he said what he's noticed is that the great traders still make the same mistakes that the novice traders do. It's just they make them less often. And I just loved that quote so much, because that... you're asking me if I still catch myself making mistakes. Of course I do. I'm still human. The point is, you have to keep the mistakes or be aware of them to such a degree that you make them less and less. You catch yourself each time. Oh, I was about to make that mistake. I'm not going to do that again. But you're still occasionally going to have one slip through the net and make a mistake. There's just no way around it. You're human. But you just want to be making those emotional and mental errors less and less over time as you gain experience.
All right. And the final question, the final one is here. So what would you say to the trader who's constantly hunting for action instead of profit?
Trader who's constantly hunting for action instead of profit, I would say just chill, bro. Chill. Have I got anything to add to that? I have. I've got another great quote from Ed Seota. He said, and this is probably his most famous quote. You can look it up online. There's lots of people repeat it. Everybody gets what they want out of the market. Ooh, mystical. What he means is, whatever it is that your deepest heart desires, you will get out of the market. So if you really hunger for action and excitement, you will get action and excitement out of the market, but you will probably lose all your money at the same time, right? Whereas if you're trying to, another way, if you're trying to win all the time, you always want to be right. Yeah, a lot of people always want to be right. That means that they will choose particular trading strategies that allow them to have a very high win rate, but that doesn't necessarily translate into them making a lot of money, because what they might be doing, for example, is the opposite of trend following. Trend following, in the way I do it, involves a lot of small losses, because you try and buy into a trend. I got that one wrong. No, it's not going up. It's started going down. Okay, I'm out of that. Let's try something else. You've got a lot of losses, but you always keep them small. But then you have a few massive wins, right? Like you mentioned earlier, 20% of your trades accounting for 80% of your profits, Pareto rule, that kind of thing. So you'll have some really big trends that you'll make loads of money out of, and then they cancel out all the small losses plus tons of extra profit on top. What a lot of people do, if they want to be right, if they can't handle the feeling of being wrong on a lot of trades, then they do the opposite. They find a strategy that allows them to do what old Wall Streeters call picking up dimes in front of a steamroller. So it's like, I've made a bit of money, 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 I've lost all my money. Right? Do you see? That's people who want to be right. They're right every day. They're making money. They love it. They're having such a good time because they're always right and they can show off to their friends. But then, unfortunately, their strategy means one day they will be very, very wrong. That's the way those types of strategies tend to work, unfortunately. What I'm saying is you can't have your cake and eat it. You can't have it all. You can't have I'm right all the time and I'm making money all the time and I'm excited all the time. It doesn't work that way. Sorry.
That was great, sir. Thank you. Thank you for your time and thank you for all the insights. We're wishing you nothing but success on your journey in trading. And thanks once again. Have a great evening, sir.
Thank you. I hope that was really helpful for you. We went through so many different ideas. I got loads of stuff across. I'm pleased with that. Is that the longest podcast you've ever done?
Yeah, I think so. Yeah, kind of 2 hours almost. But that was really great, sir. So thank you and goodbye.
Thank you.
Prop Chat. Ultimate insights of trading with Sabio.
And that's a wrap on today's deep dive with Glen Goodman. If you took just one thing from this episode, let it be this: critical thinking is your best asset. Trade smart and question everything. Want to test your edge with real capital? Join us at Sabio, like this video, and subscribe to our channel for more videos like this. And by the way, it's a great day for trading. Just think about it. See you very soon.